in the topic that we're addressing today. It would be very interesting to get your perspective.
Thanks. So I'm Andrew Howard. I'm the CEO of Kudelski Sesurity. We are a solution provider and partner for major enterprises. We do a tremendous amount of work in the encryption space, particularly in the distributed ledger space, the blockchain space. Over the last 2 years, we have been fortunate to participate in over 100 engagements with big financial institutions, all the way down to startups, 2 people in a back office somewhere in a garage, thinking about these problems. And I'm the security guy. We're paid to manage the downside risk for our clients. And this is a problem that the use of DLTs for anti-money laundering is something that a lot of our clients are thinking about, and a lot of the technology that you'll hear about today is focused on. So I'll start with the positive. If I think about DLTs and I think about blockchain, this is the problem that technology is built for. This is what it is ideal for. It can provide transparency. It can provide an ability to remove the information disadvantage between parties. It can also enable huge process optimizations across the process of looking at financial transactions. And that is really why I think the future is bright. I think farther down years in the future, I think to myself, this is technology that can make a big difference on this problem. It's built for it. I think where we are today, the reality is there's reason to have pessimism at the same time. I think the technology is evolving, but what we see in the market, particularly with our clients, is that while the technology at a theoretical level makes a lot of sense, actual implementation, actual reality is not the same. Most of these technologies that are being deployed for these types of problems and similar problems across the blockchain space, they typically are vulnerable and typically have challenges. The technology, the basic premises make sense, but the implementation is poor. I'll also say the regulatory environment makes this incredibly difficult. As country to country, region to region, even state to state, in some countries, the implementation requirements around compliance make it difficult to implement good solutions. This is one space where we are out-regulating. The regulation is moving faster than the technology. That's not true across many other spaces that I can think of. In fact, I've been on 3 panels this week where I gave the exact opposite speech on different topics. This is one space where that's different. So overall, I'm optimistic about the future, but I would say I'm pessimistic about the now, just based on the realities we've seen on the ground, but I think we're heading in the right direction. Thank you.
Thank you very much, Andrew, and I think it's a very good lead for Pratibha to give us a perspective from India. India being one of the very few countries that is looking into banning crypto. So there is regulation at its strongest and at its hardest. Can you give us an overview of the implications and how you see this can be resolved in the future and how it will impact India?
Sure, thanks, Hans. To introduce myself properly, I'm a banking and finance lawyer. I used to work at Goldman Sachs before I came back into private practice. We're a global law firm with offices headquartered in India, but we're in the US, in New York, San Francisco, in Munich, and focused on the technology space and working with the Indian government in terms of streamlining the regulations with respect to new technologies, including fintech. So we work very closely with the Indian government to find or to help them navigate this very complex issue of how do you regulate technologies that are growing on a daily basis. And fintech is very close to our heart because if you think about fintech, like people think crypto, but fintech is very broad. You're talking about digital banking, digital lending, digital insurance, payment systems. These can be significant tools in a country like India where you can use financial technologies for financial inclusion. We still have about 200 million people who are unbanked in India, have no access to banks. Since 2014, we've seen 59% growth in access to banking. A significant aspect of that has been, fintech solutions that have come up. In that aspect, if you think about anti-money laundering and counterterrorism financing regulations, you think firstly about national security issues. And again, in a country like India, it becomes a very sensitive topic because it's not only important for national security, but for economic growth. Because we have a cashless economy, a parallel economy, which is, sometimes people say nobody knows exactly because it's a parallel economy, but they think it's as big as our real economy, our financial economy. So the regulations, the issue becomes very, very sensitive. However, you need to balance it against the need for ensuring fintech can be used for financial inclusion, like I just mentioned, ensuring that the poor, the underprivileged get access to banking, access to finance, access to insurance. Second, globalization. For developing countries, I think, again, we need to be part of the globalization movement. We need to ensure that you have migrants going from India who are sending money back into the country. And very strict AML, CFT regulations can really hamper the movement of money from one country to the other, especially when the amounts are lesser. Both when I talk about financial inclusion and cross-country transactions, for example, for migrant workers, the amounts we are talking about are not significant. But the regulations don't differentiate between the big transactions and the smaller amounts. And so it makes it very difficult to have growth in these areas. Similarly, banning cryptos. Again, if crypto can provide us a solution for a more stable role for India in the global market, if you completely ban it in the name of national security or terrorism financing, then you've inhibited India's growth right there. And I would say, lastly and very importantly, it can be misused. We've seen few cases lately in India where the anti-money laundering laws have been used for political prosecutions. And that's possible because the laws were made very, very stringent as a reaction to some of the cases that happened in India, where we saw some big business houses being accused of money laundering and leaving the country. As a reaction to that, we made it very, very difficult for any prosecution, for any defense to be put up. So you could be, no bail could be issued unless the prosecution can prove is convinced that there is no wrongdoing. Similarly, a property can be attached even before you file an FIR. I mean, the normal safeguards in a democracy that are available in such a scenario are not available today in the case of anti-money laundering laws, which makes it, again, the people who are misusing or committing the offenses find a way around, but then the law gets misused either for corporates who are following the law or, like I said, for political prosecution. So it's actually today, if a client of mine gets an anti-money laundering law notice, then we can charge any fees because they're so scared that it's a criminal action. So that kind of a fear in the business community can really hamper growth and innovation. I'll stop here for now.
Thank you very much. Very interesting. And again, I think a perfect lead for Magdalena. You're the head of compliance of Crypto Broker. And I think you wanted to share with us some of the myths and the wrong perceptions in this industry. And I think it would be very interesting for the group to hear from you what you have to say.
Thank you, Hans. Yes. So I work in compliance with cryptocurrencies. So some people might think, oh my God, what a nightmare. But in fact, it's not. Previously, I was working in compliance for a Swiss bank, Credit Suisse. And when it comes to compliance and digital assets, there are so many wrong perceptions and myths. And today I will give you some insights into what the practice and reality looks like. So working at Credit Suisse, when I was doing KYC and AML, I was only able to see like the information from the client one hop back. So let's say the client has an account with another Swiss bank, the money came from there. So this is how far you can go in traditional compliance. You can just see like one step back. When it comes to cryptocurrencies and the blockchain, the technology is amazing because every transaction is recorded on the blockchain. So with the right analytical tools, you can go back to the first transaction which was recorded on the blockchain. So you have so many layers, you can go back and you can really deep dive and do proper AML checks and transaction reviews. This is very helpful in order to combat illicit activities and money laundering. And everyone is somehow scared. I attended a few sessions during the last few days, and even if the topic of the presentation was not AML KYC regulation, everyone is talking about it. So this is like the omnipresent topic for the financial industry. And in fact, there is a very interesting report which found out from Chainalysis, which is one of the analytical tools providers where you can do these analytical checks on the blockchain. And they found out that in 2019, only 1.1% of the transaction volume on the blockchain was criminal activity. And with the help of these tools, it was able to further investigate that. So I think that the wrong perception comes from, I see many institutional investors which are afraid of that. I do crypto compliance trainings for banks, and it's each time the aha experience after the workshop and compared to before. And I think that people don't sometimes too well understand the blockchain technology. I think it's very complex, and this is why they're also afraid. So one key to getting rid of these wrong perceptions and myth is education. So there needs to be education on what it really looks like, anti-money laundering, counterterrorism financing, when it comes to digital assets, and we're on the right way. I think it takes time. And another challenge I see is also on the regulatory landscape, because back in 2017, when Bitcoin was hitting its all-time high, there was almost nothing on a national level when it comes to regulation of the fintech industry and digital assets. Nowadays, the biggest challenge for businesses out there is the dynamics, the regulatory dynamics. There are so many laws and regulations entering into force, and it's very difficult to follow all the developments, to be compliant in all the jurisdictions you are having your business with. And when it comes to cross-border business activities, it's also very costly, because in Switzerland, one law applies. In Singapore, it might be different. In India, they're thinking about banning cryptos. So these are the challenges and the wrong perceptions when it comes to digital assets, anti-money laundering in the modern fintech industry.
Very much, Magdalena. I want to move on to Igor. You're the Chief Digital Officer of a commodities trading company in Geneva, a rather big one.
Not only commodity trading.
and other activities, logistics also, and others. So you're certainly aware of anti-money laundering risks. And you, better than anyone else, because we have had discussions in the past, you know that in order to eradicate this risk, we need to train the data models that are required for artificial intelligence, maybe to better tackle and identify these risks. I know you have put a lot of thought into this area. Can you share some of your ideas and concepts with the group?
Yeah, sure. We spent about a year of research trying to mine these lots of data, this ocean of data that we have in blockchain, because blockchain is transparent, but in the same time, it's totally hidden transactions because they put much of effort to hide who's paying to who. And we spent a year trying to understand who's paying to who using these data. But in the same time, I have to agree with all previous speakers that today we lack of understanding of regulations. We lack of similar regulations in different countries. Yeah, so we can take this data from blockchain, we can take this data out of blockchain and train our models, but only regulators decide what is good and what is bad. And still, even in Switzerland, so crypto-friendly country, banks are very afraid of crypto, like they're afraid of fire. So we cannot stop progress. We cannot say like, hey, fintech, just wait a bit, okay? It happens. So if you wait, another country will do that. So you have no choice. You have to accept it, and you have to regulate it. But today, it's not so good with regulations.
Thank you, Igor. And maybe, Andrew, on the same question on artificial intelligence and how we can help tackle anti-money laundering risks, data integrity and security is absolute key. As a security company, how do you see the solutions so that artificial intelligence, where you're also involved, I believe, can play a critical role in the future?
It's a good question. I think, to your point, I agree with you that our experience is that the data is incredibly transparent and incredibly hidden at the same time. Kind of looking at what technology you're looking at and what point of the process you're looking at and what tricks have been played throughout the process. So I think the capability for transparency is there, work to do to fully realize that. On the artificial intelligence topic, this is a space we work in heavily, primarily around not training models. That's really for the experts on the technology to go do. I mean, where we play and where we see opportunity for mischievous activities is the data that's put into those models and then how the models are validated. The intellectual property around these models is really the data, not the models themselves. That's our experience. But there's a lot of opportunity for either the model to be created improperly or for the data to be manipulated in such a way that the results of the model are somewhat irrelevant. I think we're in the kind of beginning stages of that space. I think most of the community is in awe of what's available from a machine learning, artificial intelligence space. But the reality is that there's some work to do to figure out what the risks are. Producing great results, yes, but at what downside risk and what negative possibilities exist.
Thank you very much. You wanted to react to that?
I just want to add, it's so interesting to hear from the experts, where if data is transparent, but it is also there's a lot of hidden stuff there that we are still trying to understand. And imagine now for a regulator to regulate that. The experts themselves are still seeing the technology evolve, and it's evolving on a daily basis. And that's why we tell the regulators to take a principle-based approach rather than a rule-based approach. So you follow the basic principles that law provide you, why we had legal contracts in the first place, whether it's principle of harm, or principle of private property. Like, just go back to the basic principles rather than saying, thou shall not, and specify the exact technology and say, these are the rules that you will follow with respect to these technologies. But that trend doesn't seem to be taking on globally. I think US is probably the only jurisdiction that we see where principle-based approach to lawmaking is still being used. In Europe, for example, for GDPR, the privacy rules, it's extremely rule-based, extremely pedantic in its approach. And we have now a bill in India which follows GDPR, so it's extremely restrictive. And then we have the bill that is pending for banning cryptos. Again, on the basis that we don't understand the technology and hence ban it. And then, once it grows, we'll see. In the meantime, you've lost the technological advancement that other countries are doing.
Thank you. I want to give some time also to Dr.
I just wanted to add
Ford.
to that. I think law is never as fast as the technological development. So law is always lacking behind. Technology just advances, and then the regulator has to somehow run behind, and they observe, they see what is happening, they learn from that, and then the law comes. So it's always like a look, not in the future when it comes to law and technology, but always a look back. And I think this is also one of the reasons why it's so difficult on the regulatory side.
Maybe one of the biggest challenges also of the fourth industrial revolution with regulation. It's either too slow or too fast, but never right. And let me just go to Dr. Ford. I think your presentation is up now. You wanted to share with us your views on blockchain privacy and what current blockchains can and cannot do, and what future blockchains actually might be able to do. Yeah, so thank you very much.
Yeah. So thanks. I'm here representing the academic blockchain research space. I'm a professor at EPFL, leading a lab that specializes in this distributed and decentralized systems, among other topics. Is there a slide clicker? Yes, please. Oh. Okay, so the grand challenge problem that my lab addresses is what we call the weakest link security problem. The problem that most of our infrastructure is designed so that only one server, administrator, or organization has to be compromised to bring everything down. And as our systems get more complex, these weakest link chains get longer, and security gets worse rather than better. Next, please. So this is figuring out how to address this architecturally is really the mission of my lab, to go from weakest link to strongest link security. And we have the basic technical tools needed to do that. Next. Next, please. Okay, so and this is what's exciting about blockchain fundamentally, because to some degree it achieves that. It takes what traditionally might have been on a single central ledger, spreads it around so that many parties can kind of keep each other honest. Next. And ultimately, this can scale. This can make trust and security scale in the right direction as systems get bigger, get more secure as systems get bigger rather than less secure, which is great. Next. So this is great, but it's only part of the story. So what's the rest of the story, as they say? Next. So in information security, a basic principle of data protection is we always want three properties: confidentiality, integrity, and availability. Blockchains, by making copies of data or a ledger, work towards availability and integrity, but actually make confidentiality more difficult. Next. So this is kind of like building a tripod with only two legs, right? And it doesn't work so well. Next. So this is one of the ongoing topics of research in academia, including my lab and others, trying to build a three-legged tripod. Add the third leg by creating technology that can provide strong protection for the privacy side as well as the integrity and availability side. Next. We've shown in proof of concepts that this kind of architecture can work with various applications, such as e-voting, an e-voting system we've been using at EPFL for several years now. Next, medical data sharing applications we've been developing and are in deployment now. Next, and many other. Thank you. That's much easier. And many other partnerships and deployment opportunities we've been exploring. Much of this is actually done in the context of a center at EPFL that we built called the Center for Digital Trust, which may be of interest for those looking to collaborate with academia. Now let's come back to today's cryptocurrencies. I've been talking about tomorrow's blockchains. What do today's cryptocurrencies do? Well, they have different approaches to privacy, but kind of an either-or approach. There's the weak privacy systems like Bitcoin or Ethereum, where pretty much everything on the blockchain is traceable, and there's sophisticated analysis tools. There's a lot of analysis you can do for anti-money laundering and things like that. Then there's blockchains that try to go as far as possible on the privacy side, hide everything possible, like Zcash and Monero. And of course, these one might say, try to go too far in the other direction, where they reduce the trust and make it worrisome to a lot of governments and people in general, that these are just going to be havens for criminals. But my main point is the technical reality is not an either-or, black and white thing. Only privacy or only accountability. We have all the technological pieces to get privacy with accountability. And there's a big design space. There's a lot of ways we can do this potentially. For example, we could create cryptocurrencies like Zcash or Monero that provide extremely strong privacy, say for low-value wallets, the kind of things that you want personal privacy when you're buying a pizza or visiting a doctor, but much stronger traceability and accountability for large transactions. We could totally do that, right? Other things we could do is have identities actually on the chain. This is using the technology, the emerging technology that I just mentioned, identities on the chain which are usually private but can be revealed under the appropriate regulatory or law enforcement environment. We could do that. Finally, we could and ultimately need just stronger cryptocurrency governance, ways for cryptocurrency communities to govern and police themselves and avoid or revoke funds that there's evidence that they're being misused for criminal purposes. So these are all things we have the technical tools to do, but we need the will, the policy frame and legal frameworks, and the investments to make that happen. Finally, one more brief point, especially related to that last point about governance. We need better governance, and here we run into a really critical current problem that I believe is solvable, but it requires a lot of will and investment, namely who governs cryptocurrencies. Currently, there's two answers. Permissioned currencies and blockchains are basically private clubs, whereas permissionless systems are nominally open to everyone, but in practice really open to a few miners, developers, and big investors. They're not really broad-based governance systems. So to make cryptocurrencies truly governable and resistant to misuse, we need them we need to find ways to make them give them broad-based accountability to real people. And the problem with this is our whole technology infrastructure, cryptocurrencies included, doesn't know how to distinguish a real person from a fake person, a real person from a fake account. And unfortunately, the standard legal checkbox approach of contracting with a startup that does ID checks over a video conference call or something like that, that's a dead end, unfortunately. So yeah, it'll work for now to tick that legal compliance checkbox, but reality will eventually catch up. So real IDs are already really easy and cheap for real criminals to fake, and this will only get worse. AI will not help. AI will keep making this worse because AI keeps producing better fakes, and it will keep producing better fakes until AI is better at producing fakes than real people are, right? Just like we've seen in other areas. So ultimately, my point is to solve this critical governance problem, we're going to have to bring the accountability of blockchains and cryptocurrencies back to the real world, back to the physical world and physical communities of real people. And this is the last main I think, really critical long-term challenge that academia, academic research, and others are trying to address. And I think we'll get there eventually, but there's still a lot of missing pieces. So in conclusion, there's a huge design space. We can solve these problems eventually. Many of the pieces are there for stronger AML, CTF, and just better governance of blockchains and cryptocurrencies with both privacy and accountability. But we need to fit these pieces together and connect them to real people and real communities. Thanks.
Thank you very much, Dr. Ford. Maybe there are questions from the other panelists, Dr. Ford, on the presentation, but quickly back to Igor. I cut you off before, and you wanted to make a comment, so.
Yeah, the small comment that Bitcoin and cryptocurrency are not property, actually. So it's not money because governments don't want to be this money. And it's not movable property, it's not immovable property, not intellectual property, so you don't own anything, actually. So I want just to demonstrate how regulations are delayed.
Thank you very much. Are there any questions from the other panelists on the presentation to Dr. Ford? Yeah.
So I think an interplay between self-regulation and what we were discussing earlier, which is a principle-based regulation, where there is an accountability put on the miners and the developers on with respect to them taking the responsibility of ensuring that the basic principles of harm, of privacy are not breached, and then beyond that, ensuring like basic AMLs, CTF regulations being applicable to them, and then the detailing of it. If you leave it to the industry, knowing very well that you have the basic principles that are of law applicable to you. Do you see that interplay working? Because from your presentation, what I see is what the governments really need to do is be talking to the academics rather than just the industry, because industry always will have a self-interest in mind, and we as lawyers can provide them the basic, infrastructure, but the know-how has to probably come from academia.
Yeah, I entirely agree. I think this interplay between regulation and the industry development can work. Unfortunately, as you suggested, I don't think it is working real well now, in part because the the pressure is coming from both sides, but the regulatory pressure in the absence of sufficient technical understanding or advice is turning into a blunt hammer that does things like, in India, just banning everything outright, which, as you rightly suggest, is a terrible idea, terrible self-defeating approach. On the other hand, blunt regulation saying, thou shalt, eliminate privacy or, outlaw Zcash type approaches, that's not going to work either. Because other currencies, other countries will do things differently, and people will have access to those cryptocurrencies, right? And so yes, and of course, industry is critical, but self-interested, and often fairly short-sighted in the approaches. What can we get out the door tomorrow, right? Using the existing tools, and so truly solving this requires, again, another tripod, the regulation, the industry, and longer-term research, including academia, the longer-term perspective of what's possible and how to get there architecturally.
Thank you. Any from the group? Then maybe a question to everybody is, regulation usually comes at a high cost to overcome. How do you see can startups, so you just mentioned innovation, getting something done tomorrow. These are usually not the large corporations that can achieve that. Given that, how do you see the role of startups or the chance of startups, particularly in India, of actually getting an active role and seeing innovation coming from these young innovators and startups that can make a difference today? Do they have any chance today?
Okay. What we, before the central bank, even though there's not a complete ban on crypto yet, the central bank has already said that the banks cannot, or the financial institutions cannot deal with anybody dealing in or trading in cryptocurrencies, which basically is an actual ban. And what we had told all our clients who are crypto exchanges in India was to first start with self-regulation. Come up with the industry standard. Ensure that you're doing KYC. So whatever the laws are applicable today, even though there are not laws available yet for crypto trading, you ensure that you voluntarily comply with all the regulations so that nobody can point a finger. Unfortunately, not everybody did that. Secondly, I think there's a lot of technology development itself, similar to what he outlined, where you're finding technology solutions for ensuring transparency in providing. So we are only discussing crypto right now, but fintech technology, is much broader, like I said. And showing the positive aspects and working with the government in a country like India. We are not the United States, it's still a socialist structure like Europe. So a lot of these startups are working with the government to promote financial inclusion. And that helps the government understand the technology and not limit the use of it because they're seeing its advancement.
Yeah, so yeah, that's great. And to address it from the perspective of Switzerland, here we're actually blessed with a very, I would say, cautious but positive approach to regulation, in the crypto and blockchain space. Switzerland, I think, was the first with a really solid officially supported framework for startups wanting to innovate in the crypto space, and partly as a result of that, we have an extremely healthy, burgeoning, blockchain and crypto sector. And to answer your question, startups can and do play a major role in pushing new ideas and new technologies, bringing them from, say, academic research to the real world. And we need to keep building those pipelines and, throughout the rest of the world as well.
Thank you. Andrew, I think is Kudelski also quite active in this area? And you also very often host or embed new startups into your ecosystem. Is that maybe a mean to give the necessary backbone to these innovators?
I think the design space comment from Dr. Ford is right on point. I mean, we look at tens of blockchain implementations a year, and they are all tweaking this CIA triad: confidentiality, integrity, availability. We did the validation of record on a lot of the cryptocurrencies that were just mentioned, and all of them are playing with this design space to solve some problem, whether that's for cannabis sales or medical sales, or worked with someone that was working on terraforming and trying to use cryptocurrency for a terraforming problem. They're all tweaking the triad to solve their problem. The reality is that that's what we want them doing. We want them innovating in the design space to optimize the problem, to drive innovation. Switzerland has an environment that allows that to happen. That said, they're all struggling with KYC, know your customer. Every single one of them struggles with that challenge, how to do identity, how to track and trace transactions. And my feeling generally is that the startup community is not good at that. I mean, that's not where they're going to play well. The startup community should be innovating. There are opportunities for large institutions like us and others, as well as dedicated startups on this KYC problem, to allow startups to go innovate where they can, and then for some of the regulatory requirements, hand that off to a third party. And I think that's what's likely to happen. You'll see a lot more KYC, identity-based organizations that are designed to plug into these startups working in the design space. I will also just say one more thing about the design space. I think that's what's driving the regulatory problem. Yes, everyone has different regulation, country by country. Part of that is because there are thousands of currencies out there, all with their own little tweaks. And it's difficult for the regulators and, frankly, the technologists to keep up. They're trying to do the integrations. So.
Thank you very much, Andrew. Magdalena, and then I'll give the last word to our host, Igor.
Well, I totally see startups as the driver and sometimes also as the initiator for the regulator for legal developments. And Switzerland, as already mentioned, I think is a perfect example because we have a crypto valley established itself in Switzerland, and then a bit slowly but on time, the regulator followed by. So startups are definitely there not only to innovate, but also to drive and inspire or motivate further developments on the regulatory side.
Thank you. One last word, and then we'll take, maybe we have time for one question, or, okay.
Okay,
Thank you very much. Yep.
So I agree with Bryan Ford that maybe community may regulate itself, because maybe Magdalena will confirm every crypto organization, exchange, or any other, they try not to mix their clean money with someone else's dirty money. So every exchange has its own AML solution anyway, even if no regulations at all. They tried not to do that. So, but the only thing left is to understand who is bad guy, who is good guy, because today, thanks to Kudelski and maybe me, we can understand who is doing what already, but we still don't know who is the bad guy. Thank you.
Thank you very much. So we are allowed to have a few questions. I'll start with the gentleman back there. So we have 4 in total. I'm not sure we can take all of them. We'll keep going until our host asks us to stop. So please.
Thank you, everyone. The point and question is, who has been in a bank, in the client onboarding department? I know I was at Credit Suisse. And if you've gone and seen that, none of what you're talking here exists there. They are in a completely different world. It's a big heap of papers, even Swiss banks. That's point number 1. And I want to know, have you seen this really changing with the projects that they are implementing with a hard deadline? That's first question. Second and related question, the crypto companies are more or less not entertained by any of the Swiss banks. If you have a company which says we are dealing with cryptocurrency or even blockchain without any tokens, and you want to say to a Swiss bank, Swiss-based bank, saying I want to have my business account, no. Crypto Valley has been working on this since probably 2 years, and nothing has changed dramatically. Are there any progress and with definitive timelines on this? Thank you.
I'll ask you to keep your answers short, since
Yes, sure.
I see we have several. And
So I would like to comment on your question. So I used to work for Credit Suisse in compliance, and the risk appetite for cryptos is 0, also for blockchain companies. So this is a big difficulties because Switzerland is promoting itself as crypto-friendly, but you want to start a business, you cannot have a business bank account. Nowadays, that has changed. I can see from my practice that more and more banks are looking into offering this. They don't make big a deal out of that, but everyone is looking into it. So it is changing for the big players like UBS and Credit Suisse. They are looking behind the curtains into it, and it will take some time, but there is definitely a change going on. And I think with the 2 Swiss banks, now Zeba and Signum, they have a full bank license. It's also easier for companies with a background on blockchain, cryptos to have a bank account. So this is definitely changing.
thank you. Any reactions from anybody else, or we move to the next question? I think the gentleman, we have 1, 2, 3
I'll just
here.
quickly
Yep.
mention, in India, the problem is 7 times worse because you need like 7 photocopies in physical form for a KYC to be completed. But again, with Aadhaar, which is our identity, that's really, and the access provided to banks, that's again changing that tremendously.
Talk to your neighbor on KYC. They're experts on that. The gentleman? Yep.
All right. Well, thank you so much for this fascinating panel. I'm a lawyer, but not at all an expert in any of the things that you're discussing. My first question is that, Bryan, one of the big challenges that Switzerland to aspiring to become a leader in crypto is, I must confess, the historical baggage surrounding the banking sector, that a large number of developing countries have had a very pejorative impressions about the banking system in Switzerland, primarily because of its historic baggage of having, let's say, corrupt money of dictators and people from around the world, which should not have been in the first place. That has changed a lot, particularly after 9/11, but also a lot of efforts through EU regulations and others. So my question is, how do you address the reputation deficit that Switzerland and Swiss imagination is facing when it comes to providing leadership on crypto? And second, to you, I was fascinated by your presentation. I wanted to ask you, do you have an opportunity to talk to regulators in forums where how you can, in some ways, engage with them and tell some of the concerns that you raised so that it can become much more easier for the future when it comes to preparing what kind of products and services that you can offer?
So, okay, so your first question about Switzerland's banking reputation deficit. Now, I'm an academic, not a banking insider or expert. Maybe Magda actually has a better perspective on this. But my understanding is, yes, the Swiss banks have been for quite a while struggling to reinvent themselves. And I think the crypto valley, the whole embracing of blockchain in kind of the regulatory and the entrepreneurial space is one of these areas in which Switzerland has been attempting to reinvent itself a little bit at a time. It's been very separate. The blockchain innovation space has been very separate from the mainstream banking space. But as Magda said, they're coming together. They're figuring out gradually how to reinvent themselves. And I think that can and is happening, and that is gradually overcoming the reputation deficit as people around the world realize, hey, a reasonable, cautiously positive approach to this actually can have big positive advantages for a lot of people. On the other hand, a lot of caution is definitely needed, and I think it's good that the big Swiss banks have been approaching this cautiously. So again, my perspective, but maybe there are others.
Andrew, you had and then I'd like to go to the gentleman.
So it's a good question, and the question was, do we work with regulators to inform them about potential risks? So I'll say this, most of the crypto-related, blockchain-related solutions I've seen are 3% very difficult math that gentlemen like Dr. Ford will work in that design space to solve some problem. Someone like us will come in and do a validation. Other smart people in the community will do a validation and give us some confidence in the 3% math part of the problem. Absolutely, problems happen there. The reality that I see is that most of the problems occur in the other 97%, which is IT systems, web apps, identity management. Reality is I could have the most secure cryptocurrency in the world with the ultimate confidentiality, integrity, availability, but if my exchange is a piece of junk, it doesn't really matter. So that's where we fit in, and we often are working to publicize information about how to think about these problems. So do we work directly with regulators? Only on behalf of our clients, but we view our role as to validate and to publicize realities and help inform the community.
Thank you very much. The gentleman first, and then you, and then I think we need to wrap up.
My name is Ruggero Husler. I'm a management consultant based in Switzerland. My question is addressed specifically to
Work?
it's the distance. Okay. My question is addressed specifically to Mrs. Jain about something she said before, that large swaths of the population in India are underbanked or not banked at all. And we know that part of the innovation in the sector comes through telephone banking, mobile banking. Now the question is, how does the regulator in India ensure that the regulation is effective, cheap enough not to block the development of the banking sector?
Sure. I think actually right now, if you talk about the banking sector has an advantage because they're allowed to use our e-identities for onboarding clients. So the central bank and the government is bending backwards to ensure that any technology that can be, that is used by the banks themselves because they're highly regulated, is provided, as India is highly regulated. So when I say, easy regulations, it's comparative to, like, if you say US, it's still highly regulated, but comparatively, the banks have it easier. The problem is with the fintech industry, because the fintech industry has not been given as much rope in terms of easing of the regulations or use of the e-identity, the Aadhaar, because they're not regulated by the central bank. And so the government gets very suspicious of it, and which, in my view, really inhibits innovation to come into these sectors. I think a way that the Indian fintech industry is finding around it is what I mentioned before. A lot of these startups are working with the government. So if you come up with an innovative solution, you take it to the government and say, this is what I'm proposing to do, let's say with the farming community. So there is, I'm forgetting the name of the startup that works in crop insurance. So they actually went to the government and said, I'm working in this sector and I need you to help me. So they integrate them with the Indian startup program. But everything is slowed down significantly. And it's all done in the name of national security, terrorism financing. So I think we definitely need to find a way to reduce the noise around AML, CTF regulations in India, because their effectiveness, like if you do a study in India, I'm sure it'll prove the effectiveness is not as high as the cost that it is to the economy and specifically to financial inclusion. It's
a killer because they don't have enough time to cope with government developing regulations.
Absolutely. And then you put a criminal liability attached to it. And it's applicable to the directors. So if there is a PMLA violation and you were an independent director on the board in an Indian company, by default, you will get named in an FIR. So the startups are not even able to, and then it's mandatory if you get to a certain size for you to get independent directors. So we are definitely, stuck right now in this myriad of regulations. And then every time, like for example, when EU came up with GDPR, India just followed it. So we try and take like the most stringent regulations from the world, and that's really inhibiting growth.
Thank you. Maybe the gentleman here, and then you also wanted? Oh. She's the boss, so she will decide if we can keep moving.
I have a technical question about integrating blockchain in international banking. As I understood, the chief obstacle into this integration is that the banks consider the blockchain and cryptocurrencies to be non-transparent and have the difficulties integrating KYC and ML policies and processes there. But paradoxically, blockchain is absolutely transparent. Every transaction is visible and accessible to everyone. Inside the current banking system, the AML is based on their internal monitoring, and it's relatively easy to monitor a few hundred of thousand banks participating in the SWIFT system. In cryptocurrencies, you have to track hundreds of millions of transactions, and maybe it's more technically difficult, but the process is still visible. So my question is, perhaps do you consider that the main difficulty of integrating blockchains in international banking clients just in software? So you just need to write better software to understand these enormous blockchain networks, or it's something else?
Sure. Yeah. So I think, kind of following up on what Andrew said earlier, a lot of these cryptocurrencies that are out there are very tiny tweaks with respect to others, and so a lot of companies and startups are developing very sophisticated analysis tools that work across many cryptocurrencies, and so this tooling is, I think it's very quickly capturing, making it possible and reasonably straightforward to capture, 90-some% of the transactions happening on all the major cryptocurrencies. Now, there are, of course, other kind of oddball currencies, like especially the privacy-preserving ones, that present significantly more difficulties, technical and and others for that kind of analysis, for good reason. And in the longer term, the designers and developers of these cryptocurrencies need to work in healthy ways with the regulators and the broader community to figure out how to improve that interface, how to have a relatively standard analysis, compliance type interface without restricting what the cryptocurrencies can do or what the privacy they can provide too much. And I think we can get there, but again, it will require that healthy collaboration between regulation, industry, and long-term research, technical vision and research.
Thank you.
I want just to add that, yes, while somebody creates the collaborations standards or something like this, at the same time, the other guys creates the other standards to hide something, so it will be like forever. Yes, the regulators, they lack tools, and because they just don't understand what happens, and they are just restricted, as always. So if we create some tools just to make it really transparent, yes, they will be happy and they will allow it. But in the same time, it will be forever. This is a fight like darkness and light. So while one creates a tool to make something transparent, the other one creates a tool to hide something. So this will be forever, and this is life.
Thank you, Igor. So the last question of today, the lady, please.
Okay, just in the interest of time, I know we're running out. So I'm head of the AML task force at the Crypto Valley Association. So this is something I deal with almost every day. My question is for Bryan and Andrew. The FATF, so the Financial Action Task Force, has recently come out with guidance on digital ID, right? And in this guidance, it's established that only government agencies or only the public sector can validate IDs or identifications of parties. And that's a bit of an issue if we want to move towards some kinds of alternative attestations, right? Having the private sector attest to the identity of crypto companies. So is this on your radar? Is there any way that you can, especially with EPFL, play a role in putting together your thoughts on that and escalating it either to the Crypto Valley or in other mediums to sort of support the community and raising awareness with the FATF that this is probably not the right approach for the community?
Yeah, so this is a really good question, and I'm actually not an expert on the developing of the e-identity regulation. I've been following it from a distance, but I'm definitely not as much of an expert as you are, I'm sure. But from my perspective, I have been following it, and on the one hand, I agree with you that we need, in some sense, a freer. We need to allow. Not just government entities to play a major role in the identification and validation processes, but I also see, I've also been, looking closely at some of the other e-governance, like e-voting processes in Switzerland and elsewhere. I also see the really critical need for, in some respects, for government to have a natural monopoly role on some aspects of it. Now, I am not, so you brought up Aadhaar. So India, rolled out this extremely impressive and ambitious, kind of central identity program, which in some respects has been very successful. In others, a complete security and disaster, security and privacy disaster, if you don't mind my saying. which reflects a kind of a different, almost diametrically opposite approach, each of which has major risks and problems. And so I think, so to get back to your question, I think we can find the right ways to get private entities more involved, centrally on this and make things more fluid and lightweight. But extreme caution is needed because there are really severe risks for society, for Switzerland, for other users of these things if we get the architecture wrong. So we really have to get it right before we just allow kind of a willy-nilly approach to commercial e-identity and things like that.
Andrew, last comment?
No, I think these panels aren't interesting if we just all agree with each other. But I think this identity attestation problem is a core problem that we could have a whole panel on because it impacts so many issues. This blockchain, cryptocurrency, KYC problem is certainly one of those. But I think to Dr. Ford's point, e-voting is a very interesting topic that has exactly the same problem. So I don't have the right answer at this point other than to say it's going to be a blend, because if you pull the government completely out, you're going to have abuse. If you make it all in the government's role, then it will never work. So there's some careful blend. We just haven't figured out what it is yet.
Thank you very much. For those that still have an urge for reactions, I suggest you move into bilateral conversations from now on. I'd like to thank again our host here today. I'd like to very much thank the panelists for the time that you took and the audience also for being so engaged. Thank you very much. Have a wonderful day.